Hey guys.
So today we're going to get together and discuss some topics that are really relevant out there in the marketplace if you are buying or selling a home. I'm here with Matt Losiniecki from Keller Williams and Ben Mullikin from M3 Realty. And if you're tuning in, just know by the time you're done, you're going to be a lot more well equipped to understand the landscape to buy or sell in this market.
It's crazy out there.
It is. It's a whirlwind market, isn't it?
Just funny how quickly it shifts.
Yeah, so like you think about last year in the springtime, you had low inventory, right? You had tons of buyers out there.
Tons.
The interest rates were at a reasonable place where people were still comfortable buying, getting out there, spending their money, finding grandma's money and putting money down on houses and that
But on the rise.
And yeah, and it was going, right? Mm-hmm. And it seems like the winter market this year just dumped off. I don't know what your experience was. Mine was a lot slower than typical. And then coming to spring here, you have some things hitting the market now, and you have buyers who, they don't know what to do. They really don't. From the talks that I've had with prospective buyers and leads that have come in, they're like, okay, well, what is this interest rate and what can we do with it? There's not still a whole lot of inventory. What's going on with, that market between 250,000 to 500,000 where you have still multiple offers coming in, still, offers coming above that list price in a market where, you thought, oh no, it's slowed down. Oh, the interest rate had put a pause on things. No, not the case. We're still going. We're still selling houses, right?
Yeah, I think the inventory is the biggest thing. I mean, certainly interest rates are out there. You talked about last year and last fall and last winter. We saw interest rates, as high as 8%?
Yeah, Banker? October 15th, rates peaked at 8%.
Yeah, 8%. And they took a precipitous drop in, 6 weeks after that kind of a thing, kind of bouncing around, and we're holding steady right at, just south of 7.
We actually touched 6.375 for a couple of days it was right around just before Christmas, actually.
Yeah.
And that was when before the market shift started to happen when you get to the new year, and the sentiment started to shift with the capital markets to decide which direction we're really headed with inflation. And then the Federal Reserve monetary policy came back up into the discussion. And really the thing that kind of started impacting the overall trend for rates the most was how in the world are we going to come out from under getting back to a 2% rate with the Federal Reserve. So everybody jumped to the conclusion that we're going to cut rates 6%. And then once they came out and said, hold the phone, y'all are getting a little bit out in front of your skis. And next thing you know, they said they're going to cut rates 3 times. And then here we are. So,
the landscape that we're coming into in the spring market and towards the summer market here, I'm excited. I think there's going to be a lot more buyers who say, hey, I'll take that 6% and refinance whenever I need to. Because, with the forecast of...
Or 7.
Or whatever it is. Whatever it is, 6, 7, even if it creeps up a little bit back into the 8s. People are saying, hey, we're ready to buy. We need to move. We took that little pause to see what was going to happen, and they realized, well, it's not jumping right back down, and house prices aren't getting lower. So
that's right.
So no matter what, your dollar sitting in the bank account is not getting better for your buying power.
That's right.
It's just not. So do it now. If you're ready to buy now, right? Come see Ben, come see myself. We'll figure out how to get you into the house that you want right now. There was an interesting statistic that I saw in the last couple of weeks that a house that you would have bought, we'll use my own house, for example. I bought in 2018 and for $280,000. And my house is now in 5, 6, 7 years up to over $400,000. And that was right at the start of that rush on houses.
The trajectory went really abruptly
and it just
up.
went crazy.
Good for you for buying when you bought.
I know. But again, I was nervous too. I was like, I don't know if I can afford this. And now I'm thinking, okay, now I have all kinds of equity, right? And I wouldn't have had that equity had I waited. And the buyers 2 years ago, or 3 years ago, I should say, who they were on the fence in 2020. Oh, we're going to wait because prices are way too high. It's ridiculous. They'll come back down. Guess what? They're up 30% from where they were, 3 years ago.
That's wild.
So don't wait. Buy it, right? Would be the general consensus in my just looking at the data.
We talk a lot too about kind of the non-discretionary buyers and sellers that are out there. Death, divorce, debt, disease, diamonds, diapers. At the end of the day, dogs. I mean, a lot of people are buying houses because they've got a dog and they need a house in the burbs to let their dogs run around in the backyard. At the end of the day, don't let an interest rate stop you from living your life. And if you're still renting and you're renting and you're renting and you're perpetually renting, or you're in a house that's too small and you need to get out of that house. A year ago, my wife and I found our dream house. There's another D for those non-discretionary people out there.
I like that.
The dreams. You found your dream house, and we were sitting nice and comfortable. We bought our house in 14. We were sitting with a super low mortgage, super low interest rate. I think we were at like 2.375. Like, come on.
A rate you likely don't see again.
Exactly. You probably never will.
Yep.
But rates will be lower than they are now.
They will.
7% at some point in the future. So you don't stop your dreams from happening now, you know?
The thought of not locking in a purchase price is kind of like, to me, driving from the rearview mirror. This whole idea that what I like to do when I'm helping someone decide what their next play is going to be, whether or not they're going to sell right now and try to buy something else, is I like to go back and ask, well, first of all, like you just said, look at what they paid for their house when they bought it and ask them what it's worth now. And then divide the purchase price that they had before against the value they have now and look at that percentage of appreciation. And then just ask them, historically, what do you think is going to happen from here? Because basically, if you're driving from the rearview mirror, you could easily look back 10 years, and in the state of Wisconsin, we have an average appreciation of 6% annually across the entire state.
Which is high nationally.
It is. The Midwest is actually usually always outpacing the coast because we don't get the extreme volatility.
Yeah, that's it. And do you know how long that study was for?
It
was
from, the study went from 2023 to 2013. So it went back 10 years.
Study.
Yep.
Okay.
Yeah, and I got the slides from, in fact, once we get this edit up, I'll go ahead and I'll put that graphic up on the screen so you all can see it. We were shocked when we went to the Realtor Association convention in the Dells when we saw one of the economists from Madison put that up on the screen.
Yeah.
And it was proof. So if you see that graphic and you look back, and you can also take situations like you guys take the MLS and you just pull up a property address in a neighborhood where one of the clients or buyers you'd like to work with or people would like to live, and just go back and just type in the MLS, that address, and see what that house sold for, the last time it sold compared to where it is now. The proof is in the pudding.
Bill, in our MLS, we've got a really slick tool. There's a little tab, a drop-down history, and you can see everything that's happened from expired to new listings
That's
to
a
all
good
the
point.
sold. So boom, boom, boom.
Yeah, I like that.
I
pretty slick.
like that tool.
Yeah, MLS is good.
It's very nice.
Yeah, the thought of calibrating, coming from a guy that doesn't have a MLS subscription or the rights to the MLS, right? So, yeah.
Actually, Bill.
Yeah.
That's right.
Yeah,
We could see all that data.
but ultimately, like, calibrating what people think, I
Right.
think is really what it is.
Right, exactly. And for those of you out there who, you're on the fence of, because you're hearing all this stuff in the news that the NAR is under fire and realtors are bad people and they're taking advantage. Not true. We have so many tools to help you. And that's really what you're hiring us for, is all the tools and the knowledge and the experience that we have and the value we can bring to you as a buyer or seller. We do this every day. This is like what we love to do. We love seeing houses. We love seeing data. We love seeing numbers and being fiduciaries for our clients, helping them gain equity, helping them gain financial value in their lives. And that's, that's one of the biggest value propositions that we have is, we can bring to you all this data, all the knowledge, all the things that you don't have time or the potential knowledge or potential background to see when you're making a huge financial decision in your life.
I think you touched on it when you said experience. I think that's the most important thing. And not to get bogged down in the muck and the mire of some of the negativity surrounding this, but I think it's worth touching on that, to validate some of the experiences out there that there are some realtors who got into this industry for the wrong reasons. And in the last few years, especially, I think National Association of Realtors, the membership, it's doubled in the last 3 years. I'm not sure what the stat is, but there are people who got into this thinking, I'm just going to go out, I'm going to make a bunch of money. I know nothing about houses. I know nothing about the process, but I'm going to go out there and I'm going to buy up some leads. I'm going to find some people. I'm going to open up the doors and a house will sell itself. And that's so true. A house does sell itself, but a good realtor with good experience opens that door and tells you exactly why you shouldn't buy that house. And what it is going out there and using that knowledge and that experience. I mean, after you sit through hundreds and hundreds of home inspections, not to
Minimize.
cheapen and minimize having a home inspector, but you're a good realtor with plenty of experience can kind of point out what is going to be found in that home inspection so that you don't get financially attached and emotionally attached to a house. I see not a lot, but I have seen agents out there. I'll be in a showing, I'll be showing agents around, and somebody I've never seen before, a realtor will open that door, they'll move to the side, they'll let their buyer come in, and they'll just sit on their phone the rest of the showing while the buyer looks around the house, and that disgusts me.
Absolutely.
I agree.
It's terrible.
And how many times have you hosted an open house and people come walking through, oh, my realtor sent me to the open house. Mm-hmm. So your agent, who is supposed to represent you and be here for you in that, is not going to come with you to the house you're potentially going to buy and help you through that decision-making process and point to you the reasons why you shouldn't buy the house, and as well as the positive aspects of that house, that neighborhood, that financial position, right? There's a lot of really good realtors, and there's a lot of really not so good realtors.
Yeah.
Right.
It's true.
And I would say that for any field.
Absolutely.
Really, you go in any field.
Same thing with lending.
You know, lending, construction, whatever you go into, they're really good at what they do and really bad at what they do. Or just inexperienced, or just, new at the game, don't understand the ins and outs of it, haven't had the right training or technique or whatever it might be. But when you find somebody who's good, and you find the people who are really bringing their value to the table, they're irreplaceable, right?
100%. The other part about it that comes into play is kind of like getting stage fright, I think. When you're in a situation where you go to an open house, like you were saying, and the driveway and the street, 3-4 houses down, it's like a glorified parking lot.
That's right.
40 cars down
Seen
the street.
that.
Yeah.
Yeah, and then the best part about it is when you go on social media, and as we do, we like to share with the world what's happening around us. So we kind of like glorify that by going Facebook Live with our phone and just like, hey, everybody, look at all the cars. It's the spring market. The spring market's here. And all of a sudden, next thing you know, the person feels like, well, gosh, we don't even have a chance.
There's
and
a lot
so
of that.
that's why being very tactical really matters.
I think along those lines, the social media aspect that you talked about, I see so many agents out there throwing out, we got, sold in the first 6 hours on the market. Really? You sold the house within 6 hours on the market? Did you really go out there and did you really find the best offer for your client? Did you garner as many offers as possible and each other against each other? But did you really get the best?
Harness the
possible
opportunity
thing?
for the
6
seller to net out the
hours?
most.
Good work. I mean, anybody can go out there and throw a sign in their front yard and get 4 phone calls within a day. Hey, I want to buy your house. Take my money. I need your house. There's nothing else to buy out there. But the goal and the trick of a good agent, the objective of a good agent is to get out there and get the most amount of money possible. You touched on it when you said fiduciary. We have a fiduciary responsibility, and 6 hours on the market. Did you do your fiduciary responsibility for your seller? Not at all.
Absolutely.
That's disgusting.
Yeah, so let's talk about the way that deals are getting put together today. So so we have a new listing coming to market, and Ben, I'll ask you, what's your impression of delayed listings?
Delayed listings, I think there's a place for it out there. The concept and the idea of a delayed listing is to let it soak and let it sit on the marketplace and kind of garner interest and allow people to see it and make plans to come see it. Again, not to get mired in the negativity of things, but some people will use it in kind of a nefarious way. A listing agent may say, hey, this is in a delayed status. I'm going to get my clients in through the door, which in reality, the rules are you can't get anybody through the door. So a delayed listing is no one comes in, including the listing agent and their clients or their customers, and it will be shown on this day. Everybody get ready for it. And for the most part, most people play by the rules. And I've even seen some people where they did it the right way. People will write an offer sight unseen on these delayed listings.
Imagine buying a house sight unseen, people.
But I think for the most part, I think some of it gets lost. I mean, when a delayed listing sits out there for 2 weeks, hey guys, because that's the rule that our MLS throws out there is when you are going to have a listing in delayed status, you have 2 weeks from the time you put it in the MLS to when you start showing it. I think some of it gets lost if the idea is to kind of prime the buying public and say, hey, this is coming to the market. Get ready, guys. Set your schedules. Do you need 2 weeks for that? I mean, when something hits the market, buyers and their agents are primed and ready to go within hours. Mobilize, get out there, tell your boss you're going to be leaving early. Tell your kids you're not coming home for a minute because I'm going to go out and show this house that just hit the market.
You guys both have small kids, and it's like you're holding your kids up, and their legs are going like this. All they want to do is write an offer.
There are some times where you bring the kids to the showing because I don't have childcare. Hey, can I bring my kid? The clients, yes, absolutely. We got to see this house. Yeah. Right. And to your point with the delayed, if you have 2 weeks, it'll get stale and you might lose that buyer public, right? You might, in that 2 week window, something else might go live like on the weekend in between, and you just lost 20% of your buyer. Now, that being said, if you're in delayed and you weren't planning on listing it till that point anyway, some of those buyers wouldn't be there anyway, right?
Right.
But you got one buyer for one house, right? You're going to have one buyer for you as well. So that pool, while it might shrink a little bit, it's not going to shrink all the way. But I would say the key is a weekend delayed makes your anticipation high, right?
I'd say a weekend is a safe play.
You put a week in delayed. I'm a big fan of delayed as a listing agent.
The house that I bought was in delayed status in 2021. I drove past the house a half a dozen times. I went on Google Maps. I looked up the house, and then I got on my bicycle and I rode through the neighborhood because I want to get the vibes.
Yes.
Just full disclosure.
There's
a little bit of stalking going on.
Yeah. At the same time, though, delayed allows buyers a chance to go and have that time to scope it out, right?
Yeah, because years ago, you used to be able to actually go and do 2 or 3 showings on a house. Like prior to 2018, maybe?
Lightly negotiate back and forth.
I'm gonna have my parents come back through this with me, and I just want to be doubly sure. Now, you got your air card on your laptop. You're in the car. You're writing the offer.
That's right.
Before you even maybe leave the listing.
I'm calling Bill from the parking lot of the street
for an updated pre-approval letter.
I need a pre-approval letter yesterday. Exactly.
So the second thing, if we move past delayed listings and we talk about other things that are happening and put transactions together, let's talk about cash offers and how cash offers get put together with buyers. What does that dialogue look like? If someone came to you as if they thought they were going to get a mortgage, do you have any scenarios where someone wrote a cash offer and didn't realize they're going to write one when they met you? Well, the reason I asked that question is because it has happened for me.
Okay. Explain that situation. Explain the situation.
So basically, right now, actually, I have a customer that is that's buying a condo in Menominee Falls. And the lady has a property to sell. She has about a $50,000 mortgage on her house now, and she wasn't going to basically go and close on a bridge loan. And you have to show proof of funds if you're going to write a cash offer. So basically, behind the curtain, she wants to get a mortgage. But ultimately, to do that, she had to show her IRAs. She had to show her retirement assets as a part of evidence that she could pay cash for the house. Or the person would go and get a letter, or they would get money from family to show that they could write cash. And sometimes that's how someone one-ups the next person in order for them to win. And in reality, you could have someone that was putting 20, 30% down, but they didn't have the willingness to waive the appraisal or waive the home inspection or get ultra aggressive to win. And even though those people in the ordinary market would be super strong.
When I'm on the other side of the transaction, when I'm the listing agent and I'm fielding 8, 9 offers on a place, there's definitely a discernible difference between a cash offer and an offer that's not contingent upon obtaining financing. And there's definitely a difference between the two. And I think people throw those words around. Hey, I'm a cash buyer. When in reality, they're not a cash buyer. They either have a strong enough position to not have to be contingent on getting financing.
Behind the curtain, they're still getting a mortgage.
Right.
Because they don't want the tax ramifications of liquidating their IRAs or their retirement accounts.
Sure.
And that's exactly what's going on with this customer.
Sure. And, to some degree, too, that still carries somebody who can show proof that they do not need to make an offer contingent upon financing. They're still able to trump offers to a certain degree, to a certain point, that have financing in there. There's other points and there's other ways that you can structure a deal and you can structure an offer to where you are still more competitive than that person coming in with cash.
I've had someone say that sometimes the cash offer is looked at in a negative light because let's say you're going to buy a house for $450 and you could pay cash for that and you were going to do earnest money of $20,000. Well, that person could be equally likely just to be willing to walk away if they suddenly got buyer's remorse.
For $20,000?
Well, I suppose 20,000 is probably a poor example.
a little bit much.
Let's say
Buy a house and list it again,
Yeah, well, let's say like someone said this to me. I didn't physically, witness this myself. Someone said to me that they thought that a cash offer with someone with like say 1% of the purchase price for earnest money. Let's say it was a $250,000 house and you had 1% of the purchase price.
Yeah.
If someone was absolutely loaded and they suddenly decided that they didn't want to buy.
Oh yeah, they just walk away and you lost the deal.
Yep.
Yeah, for sure. And really all the way up to you do a $400,000 loan or $400,000 purchase price cash deal, $4,000 to a lot of people. Well, it's a lot of money. If it doesn't feel right, walk away. That's not a whole lot to walk away from necessarily. Whereas, you get to $1 million listing, something like that. Now it's like, if you have cash to buy $1 million listing, they don't care. They're out.
Sure.
Whatever.
Absolutely.
It is. But most of the time those aren't the buyers who you're necessarily worried about, because if they're buying $1 million house, they know they want this house. That's where egos get into play, is into that marketplace where, okay, somebody wronged somebody and now I'm out of this house, right?
Yeah.
You deal with that a lot in that, in that kind of category. And actually all the way through real estate, all the way through the market, you can see egos come into play, right?
Yep.
I mean, I'm sure you've seen that on deals where somebody says, oh, my house is fine. We're not giving you any money for, inspection contingency things, or we're not correcting things, right to cure items.
Sure.
And all of a sudden, no, well, I want out. Well, no, maybe we'll do something, but we're not going to give you everything you want, right? And then, egos come into play.
As a seller,
tensions get high. It's like, okay, we're just trying to get the deal done. So how do we do that? And that's another reason why hiring an agent to negotiate for you is a good thing to have, right? Mm-hmm. Because in that case where you have these different markets and different different peoples and personalities and things going on at the same time, people walking away from deals because they have the cash to do so instead of keeping the deal together because of a small item,
Right.
It's a delicate balance how you handle the conversation.
Exactly. So
Yeah.
I think that, to your point, in structuring deals the right way, whether you bring in a cash or you bring in a finance deal or whatever it may be, it might be the best thing as the agent. This is for the agents out there. Best thing for the agent is to communicate with the other agent prior to writing that offer.
Absolutely.
Okay?
And actually read the MLS remarks.
I'm going to read the remarks. I'm going to go through the whole listing, make sure I have all my details set, and then I'm going to call Ben. I'm going to say, hey, I have this buyer. I don't know what your situation is with how many offers you have or anything like that. I don't need to know that information. What I do need to know is how we can get a good deal put together, right? And what is the sentiment of the seller? What is the sentiment of,
That's
what
how
are
we
the
won.
needs?
That's how we won our house.
What's important to them.
Right. What is important to them? Well, how can we get this deal put together in a way that is a win-win for everybody? We get a house and they get the most money for what they need, or their needs met. They need something quick. They need something,
Another thing that I'll say is, as a lender, I get carbon copied in on a lot of cover letter emails from realtors where they're submitting offers. And I see some that are very creative and very pointed, and they really establish confidence that this agent has situational awareness, the way that they're representing their buyer, and that brings a lot of merit. And then I've also seen some where just a couple, 2-3 bullet points and just a really vanilla explanation about the buyer and the transaction, and just hit submit.
Yeah.
And I gotta say, I really think that matters.
Yeah, with 9 different documents down there attached at the bottom.
Yeah.
That's right.
Yeah.
One other interesting point I think is important to make about cash, and maybe this is your experience as well. I'm not afraid of cash. With my buyer clients, I tell them not to be afraid, because at the end of the day, to a seller, a cash transaction and a mortgaged financed transaction is all the same. It's all green money in their pocket at closing at the end of the day. It's just one less contingency.
Yep.
And I've noticed a trend with buyers with cash. I've noticed that a lot of cash buyers and truly cash buyers feel like their cash is worth more than it actually is in a transaction. And so when buyers are conditioned to have to go above asking price and to
Maybe
make
this will
the
change your
best
mind.
terms as possible, a cash buyer is going to come in closer to asking price than somebody with finance, somebody who is swinging for the fences, somebody who has to have this house. And to a seller, each seller is a little bit different, but when you're on the other side of the transaction, you're sitting down presenting 6 different offers. The cash transactions, the cash offers are always usually up towards the top of the stack, towards the, always in contention. But I've seen where a difference of $2,500 coming from a buyer, $2,500 additional on the purchase price trumps a cash offer $2,500 less. Now, every seller's got their number, what that difference is. But I'm not afraid of cash, and I don't think buyers should be either.
Yeah, and then the other thing too is if we go through and get the customer underwritten ahead of time, where we can give basically an approval letter that's basically completely reviewed by underwriting, that has been vetted completely. And then we also have gone as far as putting in the property address for the houses to verify whether or not we can waive appraisal completely, because there are appraisal waiver, there we go, we'll edit that out, appraisal waiver criteria with Fannie Mae and Freddie Mac, where we can basically put right on the approval that no appraisal is required.
That's pretty slick.
That's really nice. And the other part of that, touch on what you were saying, Ben, is that, if you have the cash buyer and the finance buyer, and there's $2,500 over here, or $3,000 maybe, that's above this, and they're both above the ask, and we're worried about appraisal as the seller or as the listing agent. Well, and this finance buyer says, hey, we have an appraisal gap. We can cover that if there's a gap up to
For the audience, let's say what that is.
Yeah.
X amount. So that appraisal gap coverage is, so your appraisal comes in low from your purchase price value, and your loan will cover, depending on your position or situation, Bill can touch on that more, 80% loan to value or whatever it might be, right? There's going to be a gap between what that purchase price in the seller's pocket is going to be at the end of the day and what
the buyer's forced to guarantee, right?
the bank will loan. So the buyer has to come up with that extra money.
Or be in a spot where they maybe don't have 20% down, for example, if that's all they were coming in with.
Which at the end of the day is okay. You're okay with that as the banker, but something gets levied on the buyer at that point. They're going to have PMI at that point.
That's right. That's right. So in that situation, you have to be able to cover that gap on that cash. And if you say it up front and say, hey, we have that ability to do so, you're probably you have a good chance of winning that offer, for that $3,000 difference, because that's real money.
And the appraisal gap clause discussion is kind of like one of those things where I tell customers that I'm speaking to that this may not be totally tangible to you right now until you find the house, like how strong you're willing to go in on that gap. But if you went to the open house or you went out on a showing and you saw overlapping showings and there were 4 cars in the driveway waiting for you to walk out of the house so the next person can go in, and you were in a situation where you saw your kids playing in that backyard, you suddenly see a lot of merit in the differential in like being able to come in with something with a little more strength, especially if you maybe had a couple offers go awry.
Yeah.
And waiving the appraisal is the next step, right? Because there are some people that will do the gap clause where they'll guarantee a spread, but the appraisal waiver completely if the lender can back it up. Would you say that totally trumps the
everything.
gap clause?
I think so.
Absolutely.
I think appraisals and home inspections are the 2 most important contingencies that buyers are going to put into their offer. And I think 2 of the most important contingencies that a buyer needs to have in their offer. And being able to structure your finances and structure your loan and know your cash position and leveraging your cash position is the safest way to be able to play with those contingencies a little bit.
I'd like to segue that into looking at a spreadsheet, if that's okay for a minute.
Yeah.
Yeah, absolutely.
So we have an appraisal gap spreadsheet that we did, and this spreadsheet that I use with Matt and Ben, in this example, we have a purchase price of $350,000. We had an appraisal of $325,000, and the buyer agreed to guarantee a $25,000 gap. And in this situation, I just zoomed it down so you can see the screen better. If the customer was $25,000 short, and they were originally planning on putting down, 20%, where they'd be putting down $65,000, and now they have to come in with another 25. Their original cash to close was going to be $70,000. Well, that customer could either take a 85% loan to value situation, not bring any extra cash. They could actually just come in with an extra $8,750 and have their mortgage insurance be somewhere in the vicinity of, say, $50 to $70 per month. If they put 10% down, they could come in with even less money than they were originally planning on coming in with, including closing costs. And they could have some mortgage insurance that might be closer to, let's say, $100 to $110 per month. And in that situation, they likely refinance anyway within the next 6 to 12 months because of the forecast that interest rates possibly will be going down. So, and then the other thing is if someone's really concerned about the mortgage insurance, there's a really small one-time upfront cost to completely waive the mortgage insurance. So whenever I hear someone say, well, we should just make up the difference in cash, that's the last thing you should do.
Why?
The reason why you shouldn't make it up in cash is because usually the one-time cost to waive the PMI is going to be somewhere between $1,000 and, say, $1,800. Now, obviously, it's dependent on the criteria of like how much their down payment is and certain other factors. But let's say it's between $1,000 and $1,800 as a one-time cost, completely wipes out the mortgage insurance.
Which is great because over the course of 2 years, that's what it would be if you're still carrying that PMI at $75 or $100 a month.
Yeah.
Of PMI over a year, that's $1,200. Over 2 years, you're at $2,400 already, and so for $1,800, you're out.
So for those of you keeping score at home, that's called single premium mortgage insurance, and you can actually make it where it's refundable. So there is that capability where the money that was put up for the PMI for the single premium can actually be, the unused portion can be refunded to the customer at the time the loan got paid off.
If you're to refinance in 6 months down the line?
Yes, so you don't lose the money.
Cool. Because the other thing that comes into play with that too is with how fast things are appreciating and the different seasonalities of our market. I mean, if you were to refinance 6 months to a year later, I mean, you might have that difference in equity already built up with the way your house is appreciating. Which
is why I say don't drive from the rearview mirror.
And it also helps to have a great mortgage advisor on your side who knows all the tricks of the trade.
Bill, how long have you been doing this, man?
Too long. I started in 2002, March of 2002, at a small community bank, and it was called St. Francis Bank. Got bought out, and a lot of good memories from there when we were sending over the pre-approval letters on the fax machine.
There you go, the fax.
Yeah. For those of you Gen Z, that was when we put a roll of paper in the fax machine, and then like you would call in, like we would, instead of sending things carrier pigeon, we would just put a document through the fax machine.
There'd be a cover letter.
Yeah, there would be, so you know who it was from. Yeah. This is a secure fax. And then the best part was the rate sheets would come out where they would just drop a rate sheet on your desk each day, and those were the rates. And now the rates change without us even being told. Like, the rates update on the system. So if you say you're going to lock someone in on a mortgage and the rates changed, the customer could literally be subject to a different interest rate if there was market volatility and the lender wasn't actually paying attention. So we covered an awful lot on strategies about buying a home in this market. And ultimately, we all know the common denominator is that you're not a seller if you can't buy a house first if you already own a home. So Ben and Matt are great resources for understanding the sequence about what needs to occur in order for you to get a property in this market before yours is sold. I'm going to put their contact information down below in this video. And we should really spend a little bit of time talking about something that's controversial and not yet approved, and that is the NAR settlement.
Bring it on, baby.
Yeah, so for those of you at home that don't know about the NAR settlement, Matt, why don't you tell us what that is?
So there was a lawsuit that took place nationally. It was a class action lawsuit against the National Association of Realtors. And the way that commissions were structured and how things were structured around the way sellers were in some states forced to pay buyer agents. Now, through the settlement that took place, there's a lot of misinformation that's been going on in the media.
Amounts. Shameless.
It's actually really one-sided, and it's very much against the Realtor Association and those of us who are doing the job the correct way. People in Wisconsin need to know is not much changes in our situation based upon how our contracts and buyer agency contracts and listing contracts were written. Throughout the country, there are states that forced sellers to pay for buyer agency. And with that, there was this notion that there were fixed rates for realtor services, which has never been true.
Ever.
There's never been a standard rate in our business. It's always been negotiable. You could, pay $150 and put your own house on the MLS if you wanted.
Always.
So there are all kinds of options for you to list your own home.
No one was forcing you to use a realtor,
No
right?
one forced you to use a realtor. You chose to use a realtor to sell your house because of their expertise. The realtor you chose, now that's a different story. That one's on you. I'm sorry about it.
So for those of you that are wondering, Ben, why don't you break down what the typical commission structure is in Wisconsin?
Well, there is no typical commission structure.
Trick question.
Thank you. That's great.
Trick question.
There are companies out there. There are companies who will encourage their agents to hold steady to a particular commission. And there's within that, they would typically throw out a commission that they would pay to a buyer's agent within the MLS. And that's where they kind of communicate, hey guys, we're growing. Let me start here. When a seller hires a realtor to sell their house, they pay them a commission. They pay them X percentage, X number of dollars. In the state of Wisconsin, we've always had a very robust and a very competitive free and open market in terms of real estate brokerage. There's been limited service. There's where you charge a flat fee and you're in the MLS. There's 4%, there's 6%. There's a whole wide range anywhere in between. And when a seller hires an agent to sell their house, they pay X percent. From there, that agent then turns it around, puts it in the MLS and says, hey, any buyer agents out there representing a buyer, if you come to a successful closing, you represent your buyer, I will pay you X. And the average, I would say, is 2.4% here in Wisconsin. Other parts of the country, it's 3%. I think Madison, it's 3%. 2.4 is typically what it is here.
And as long as it's a seller's market, that's been pretty common to see. And in other markets, there's commission that for a buyer agent, for example, that could have been as high as 3%. And even when it was a buyer's market and not a seller's market, we were seeing commissions even over that.
Bonuses.
Yeah.
That's right. Bonuses paid. To touch on that, the commission structure that other states have had and the way that it was formulated, sellers were really, I could see why they were getting ticked off. There was no communication as to why they were paying for a buyer agent to come to the table. And in our marketplace, when I sit down with a seller, I'm saying, hey, we're going to list your house. This is what my commission is. And it is in your best interest to offer something to a buyer agent for multiple reasons. One, you want somebody competent on the other side of this job. Two, you want to have somebody who can bring a buyer to the table who may not have cash out of their pocket to pay that buyer agent. Right? You'd be limiting your potential buyer pool.
Absolutely.
And in this current structure of how real estate is transacted, buyer agency fees can't get roped into your mortgage. You can't finance a buyer agency fee. So you'd be limiting your pool of potential buyers. You'd be limiting the opportunity for buyer agents to want to show a house, especially in a market of you have a lot of inexperienced buyer agents who just entered the marketplace in the last 2 years. Like Ben mentioned earlier, we have almost doubled the number of agents in our local MLS. And not only that, but nationally, it's close to doubled. So you have inexperienced agents who will say, well, they're not going to pay me, and I don't want to have this battle with my buyer to pay me, so I'm not going to show that house.
What about representation if you're a listing agent and that buyer is not represented? What about that?
So that also is negotiable. I've had deals for myself where, depending on what the situation was, if I brought the buyer to the table and had the sell side, the commission structure would be different than if a buyer agency brought the buyer to the table.
A variable commission.
There's a variable commission.
Yep.
And realistically, that's all negotiated between the seller and the listing agent at the dining table.
So what's being proposed now?
Well, there's
decoupling the buyer agent commission and the MLS is the main narrative, right?
Correct. I mean, they really don't want promotion of buyer agency commissions being, in the MLS, and that's not a motivating factor anymore in selling a house.
And this narrative that you'll see time and time again that's going on right now in a lot of the major media outlets is this whole idea that the value, that 6% commission is dead, that there isn't as much of a need for that type of compensation for the services that are being provided. And I think this is a good segue just to spend a couple of minutes to talk about the value of a buyer agent in a transaction. So Tammy, can you pull up the list of value propositions and the things that a buyer agent actually does for buyers?
Matt, I just want to throw one other thing out there. You were mentioning about the reasons to pay a buyer's agent. I read a stat today, and I haven't vetted this yet. I'm not sure, but 71% of all residential real estate lawsuits are a direct result of one of the parties not being represented. So
that would make a lot of sense to
just
me.
the liability alone. I mean, a buyer's agent shoulders some of that, for one. And for two, they're heading this stuff off at the pass before it even gets to that point.
Oh, for sure. I mean, you look at how much litigation there already is in this world. And
This litigious society, man, is
and
nuts.
you read the contract. The contract is spelled out. It's 14 pages long. A purchase contract is 14 pages long. There's definitions. There's all kinds of different pieces, timelines, all these different factors that come into play. And if you're unrepresented and you're submitting your own offer and you don't have a fiduciary on your side, somebody who has working knowledge, legal knowledge of the contract, whether it is a attorney or a buyer agent, you're out of luck for the most part, especially if this is your first or second time buying. I mean, most people buy 5 houses in their lifetime, 4 or 5 houses in their lifetime. So you're doing 4 or 5 transactions with multiple years in between and that contract changing. And how many,
4 or 5 a month.
4 or 5 a month, right? We're writing contracts almost weekly or more.
I think it's also kind of like coming from this idea that if you had a situation where someone has been doing this for years, countless transactions, countless scenarios that they've gone through that were challenging, had to even use the WRA legal hotline to overcome matters where you're basically making sure that you're providing the best representation as a fiduciary for your client. And then you take someone who's just going to go and go down to the bookstore and get Real Estate for Dummies right off the shelf. Pardon my sarcastic example, but it's really what's going on. You suddenly think that you just went to the internet and you can become an expert.
That's right.
And that comes full circle right back to the experience thing. There's no way to draw somebody a roadmap for how to do this and for how to sell or buy a house. There's always a if this, then that, and that. And your good quality agent can always anticipate what's going to happen next, and then the 3 different options available to you after that.
Right. Yeah. So everything from negotiating to being there for the home inspection, to be a voice of reason regarding what's going on, handling the situation with the appraiser, where the appraiser may need to receive some comparables or something that you know about the property or something that you know about some of the comps. Like, we've had situations where an appraisal came in low, Ben, and I would come to you and we'd talk about it, and we would realize that one of the comps that was used, that the appraiser over-adjusted for the quality of the comparable, and then suddenly we were in a spot where we went back and we rebutted the appraisal, and we realized that the value was not off with what we suggested. It was because they were just misaligned in the way that they were adjusting things. So while you're going through the process of discounting the level of service that someone should receive, all of these nuances are perfect examples. We are going to put up on the screen just a couple of things here quick. We talk about gathering all the required documents. We talk about learning your wants and needs and negotiating the needs. We talk about making sure the lender's in alignment, because like with Matt and Ben, the partnerships they have with the lenders, including myself, that they use, they're making sure that that experience is going to create a good outcome, because people are quick to hit that panic button. That panic button's close by.
Absolutely.
And the reason why it is because there's so much emotion in the money aspect.
It's an emotional time in your life. When you buy or sell a house, there's usually an emotional need surrounding that, right? And that whether it's the death, divorce, and any of those items, or a financial need or a want, there's going to be some emotions tied up in selling that house or buying that next one.
Yep.
And so managing the emotions is a huge part of a buyer agent or a listing agent's job as well. Managing expectations, getting in front of things before they happen. Going into a house and saying, hey, buyer, I had a situation just yesterday. Went into a house, and before we even got there, I said, guys, I'm going to warn you, you're probably not going to be able to buy this house because you're not going to be able to finance it. There's too much that is in disarray. There's too many defects that the lenders won't let you buy this until they're corrected. So just managing that expectation so that I didn't get in there and fall in love with it to the point where, oh, now you're telling me I can't buy my dream house.
It's so important.
That's you get out ahead of it. Building relationships with your clients, understanding what their real needs are, educating the buyer on the current marketplace before you go anywhere. Having that, the pre-showing, pre-buyer meeting, okay, and explaining your values and your value proposition to that buyer. Getting out ahead of things that their concerns are. What's going on in your world? What's your timeline? What are the issues that we need to find, or what are the real reasons to buy a certain house? Mm-hmm. Do you need 5 bedrooms, or would you be okay with 3 because you have you and your husband? Do you need that many bedrooms? Are you entertaining? What are the real aspects that you need in the house?
Mm-hmm. And take that a step further in the current landscape that we're in, where we have about a month and a half of inventory, and you guys have to be really quick on your feet the way you're handling situations with buyers. And to say that you're going to decouple the buyer agent commission and you're going to make that aspect of the commission negotiable really is, I understand trying to be more transparent, but in reality, don't you think it's going to affect buyers and sellers?
Oh, it's going to affect both for sure.
Yep.
And how real estate is transacted going forward. Now, I don't think it's going to be in a negative way. I think we're still going to pound the pavement and do the job that we need to do, right, Ben? And sellers are going to sell their houses. Buyers are going to buy their houses. I don't know that we have enough even units in the marketplace to sustain the buyer level and buyer pressure that we have.
No, we don't.
So
not in the Milwaukee area.
There's going to in our MLS for sure, there's going to be action that takes place. How it takes place is going to change a little bit.
I think there's going to be some synergy with the various brokerages in the area. Like, I'm sure you're probably talking to your agents at M3 Realty about this. The idea that a listing agent is going to try and collaborate and make sure that their sellers understand the benefits of providing a commission, even though it cannot be put into the MLS as a part of the disclosure. They still should be figuring out a medium to provide it.
Of course, and nothing has been figured out yet. The Department of Justice hasn't come down with a final ruling, and they may throw some extra curveballs in. None of this is, if it does come down, none of this is going to happen till middle of the year. So we can sit here and we can project all we want on what's going to happen. But at the end of the day, real estate is still going to move forward. There's still going to be a need for representation out there, and there's still going to be people buying and selling homes. It's just going to happen a little bit differently. Our
goal here today with this message is really to reestablish and connect with people during a time where this is the way things are playing out right now. So the whole process of negotiating your highest and best sales price around what you're willing to pay to win a bid on a house or walk away with no regrets. That's making that statement to people. When I do that, I pause at the end because I want to make sure I'm not sounding insensitive, but I literally feel like I've had people on the other end of the phone or at the other end of a meeting be like, what did he just say? Like, literally, that's what you're having to do, because then, to not sound like I'm minimizing it, but then I'll say something like, well, Ben, I guess we're just going to have to go through a little bit of a practice first. And now that's very insensitive to say, but in reality, that's what's happening.
Right.
You have to find out for yourself that you wrote that offer, and in reality, it's just like when I say, what are rates going to do? Well, rates are either going to go up, they're going to go down, or they're going to stay the same. And with buying a house, you're either going to get an accepted offer, a counter, or you're going to get rejected. And which one of those do you know?
Well, in today's market, you're not getting countered. So
no.
In the face of 12 offers, I mean, the seller's going to pick the best one.
And then I'll say something like, well, if you're not willing to write over the asking price, you likely should then probably just look at houses that have been on the market for at least 10 to 15 days and only look at those. Because if you're not willing to pay over asking, then those are probably the ones that you'll have a horse in the race on.
They're out there too.
Yeah, there are some out there. What about writing offer? What about the idea of writing an offer and being in secondary?
Ooh, that's a nice one. So the concept is a seller can accept an offer in primary position. The seller does not have an out at that point, but that buyer may have several outs of that legally binding contract. Yep. Someone else can come in, a buyer who may have lost out can come in and write an offer in a secondary position, meaning, hey, Mr. Seller, I'm gonna be here as backup. And it actually gives the seller a little bit of leverage to feel comfortable to say, hey, buyer number one, you're coming back at me with some inspection negotiations. I don't like this. I've got another offer in my back pocket. Maybe they tell buyer number one to go pound sand when they send back that rejection. And funny enough, to your point before, these egos that get involved, there are definitely egos out there. And buyer one may say, well, to hell with you, man. I'm going to go find myself a new house. Good luck.
Right.
And they've got a secondary offer in backup position. Now, it doesn't mean they automatically get it, but that secondary offer, I've seen a lot of people win a house from a secondary position.
Well, with these offers above ask and, waiving certain contingencies and leaving others in play, buyers do flake. They get cold feet. They feel bad about a house. They get a report back and they can't see themselves buying this house no matter what. Well, now we have to disclose things that happened on a home inspection.
Material defects
that we may not have known before. We might be running into putting it back on the market. And now, so why are we back on the market? Everyone wants to know that answer. All those same buyers who first put in offers in the first place, they might not be coming back. Why? Because you didn't take their offer in the first place, right? So ego plays there too. Writing that secondary offer and getting in that position right off the bat is a good move. If this is your dream home and you think this is something that you want, just because there's an accepted offer on the table does not mean that you will not have an accepted secondary offer and that first buyer, walks away from the deal. It does happen. It doesn't happen very often, but it does happen.
And there are dates and deadlines in that offer to purchase that buyer still has to meet that was primary. So if the home inspection contingency passes and they suddenly have a problem with something, or the appraisal came in late and they didn't get that cleared in time, or the financing, the loan commitment didn't come in time. These are all things that can happen. No one's going to apologize for missing a deadline in a contract until it happens. No one has that intention on the front end. This has been a good talk, fellas.
Yeah. I think I learned some things from Bill here. Bill always teaches me something, right?
It's been around a long time. He knows a lot about a lot.
That's right. It's good to have good partners and good people to talk with about, what's going on in the marketplace and what we're seeing, where we're going, and what different opinions are and how people work about deals. And, I am from a different brokerage than Ben, and I'm happy to work with Ben anytime. Right?
Anytime.
And I'm happy to work with any agent who is competent and is upfront and willing to do the right thing for their part of their transaction, represent their side well. I'll go to battle with you over anything, right? on that piece of paper, we'll go to battle. But at the end of the day, I want a win-win, and I want everyone walking away with a smile on their face.
It's a zero-sum game. Absolutely. Awesome. Well, we'll do this again, gentlemen.
Absolutely.
Until next time.
Thank you.